call this meeting to order. And this is the July 19th, 2017 CARFAC meeting, Citizens Audit Review and Financial Advisory Committee. Welcome to our guests this evening and to the public out there watching, perhaps. This evening, we're going to go through work group reports and then review the second quarter and year-to-date financials for the township. So, first item of business is to review the minutes from the last meeting. Were there any comments or edits to the meeting minutes? Okay. Shall we approve the minutes then? Yes. All right. Approved as provided to the team, Bill. And now we're on to project updates. And the first item is capital and long-term liability. That would be Jerry.
Okay, so we still are scheduling the presentation of our comparative analysis of our pensions versus some of the neighboring towns that we were asked to do this year. So that's ready to go. And I believe we're looking now to present that at the regular Board of Commissioners meeting in August, so August 10th. And we'll do that presentation, and then depending on what comes out of that, what follow-up questions, then potentially we'll have further presentation at the special Board of Commissioners meeting in September. But the idea is to do that part first as an introduction to it in August, and then I guess, Bill, in September, I think you're planning to have PFM and Mockenhoff present as well, along with the administration.
Yes, yes. So the idea coming out of the September meeting will be that we have a comprehensive discussion and make sure that all of the board's questions can be answered in one meeting. So have the actuaries there as well as the asset managers.
Right, okay. And then so we'll gauge what CARFAC may or may not need to do based on the results of our presentation in August. But that should basically cover it, and the bulk of our stuff is what we're going to present in August.
I had a question for you, Jerry. What is our current funding level on the pensions? Do you recall?
Yeah, well, so the last valuation was, was based on 1/1/2015. So it's coming up, a little over 2 years ago already. At that point, when you aggregate the two pension funds together, it was, just on the borderline of 70%. I think it was just slightly over, which is significant when we'll talk about distress levels and so forth. So the next valuation will be based on 1/1/2017. That's the valuation being done now, so the results aren't known. But just, a rough estimate, our expectation is that it'll be dropping slightly. And you can actually get some sense of that already from the pension reporting that's now part of the CAFR because of the new GASB requirements. And you can see that in 2016 it dipped down a little bit. Again, the formal valuation, that's the one that really counts for establishing the MMO, minimum municipal obligation and so forth. That's a 2-year cycle, so it's based on the results of 2015 and 2016. But we'd anticipate it's going to dip down slightly, so something just below 70% is what we're expecting.
What would be the implication of that dropping below 70%?
Certain things with the state kick in, nothing that's, particularly dramatic, but, it is a sign that kind of follows along with the message we're going to give on at the August meeting is that, we were very successful as a township in turning the corner, based on the examination we did 5 years ago and some of the actions the board took shortly thereafter. But it would appear as if everything's saying it's slipping back a little bit. So, it would make sense to take some actions to boost up the funds a bit.
Does the township have currently a target funding level? Have they ever reached a decision on that?
Not that I'm aware of. There's obviously a target that's used for a rate of return to establish it. but I'm not aware that the township has set a target funding level.
Mr. Chairman, if I could add, to confirm what Jerry said, that is, there is no policy that has been established by the township or the Board of Commissioners as to a target funding level for the pensions. And I'm not sure how much detail we want to get into. I do have the history of the funding ratio for the pension funds going all the way back to 1991. Again, I'm not sure how much detail you guys want to get into tonight on it, but if you want, I have it.
I don't want to get into too much detail, but in terms of the headlines that might be made by CARFAC, if there's anything there, you know, I've wondered about the usefulness of having a target funding level that plans could be made around and so forth, and just wonder what your thoughts on the usefulness of that might be, Jerry.
Yeah, no, it's a great idea. I mean, obviously, the other thing is putting the funding behind it to meet that target. So, you know, I think that's the main priority. You know, more so not only, you know, what the target is, but how closely the township's going to make sure that they're meeting that target, as much as that. So I think, you know, what we show in August, I think will, you know, particularly when we compare it to other townships, I think it'll shed some visibility to it and, you know, hopefully foster a good discussion through the budget process.
Mary, did you have something you wanted to add?
Just going to say, I think in order to assess what the target level would be, or even if we should establish a target, which I think is a very good idea, the township, working with Jerry, probably needs to do some projections. And in other words, we need to look at, you know, what's the growth of the people who are going to be receiving these funds. When, you know, you need to project out different scenarios to see where you think you're going to be, and then where you think the funding is going to be, where the township's going to be, and then you need to figure out how you're going to go about doing that. So I think there's a lot of work that needs to be done. I mean, you don't want to just say, well, we want to target this funding level, because you need to know whether the township is going to have the cash. Is the police department and the civil service group that are on these pensions, is the demographics of that going to increase? Are we going to see a big increase in that population? So I think that needs to be done before you can really assess this intelligently and make a recommendation.
I think that you've done some of that already, Jerry. Is that correct?
Well, not so myself, but that's what the, you know, based on the current demographics, and I'm not aware of anything that says there's going to be any dramatic changes in the, you know, the staffing levels of the township, but just based on that population, I mean, that's essentially what the valuation does, that Hop is the company that performs that, so it projects it out. And then what we've done in the last couple of years as part of the 5-year planning process is to understand, you know, how that plays out budgetarily over the next couple of years. So, you know, we know what the amortizations of the unfunded liability are. We know when it's made up of a series of components, so we know when each one of those, you know, is satisfied, and then we can project that out. So as part of the 5-year planning, we've done some of that.
We should be able to figure it out.
Right. Assuming, you know, the big thing is assuming all the assumptions hold. So assumptions about rates of return, you know, assumptions about, you know, if there's any disability retirements or, you know, things like that. You know, so it's as good as the assumptions are.
So I just want to clarify, so the liability itself is not something that the township determines or you've determined, is a third party comes in and based on demographics and actuarial tables and such, they can project what the township will have to pay out in the future years?
Yeah, although the township and, you know, essentially the Board of Commissioners has some discretion in setting an assumed rate of return. And it's, I think off the top of my head, I think it's from anywhere from 5% to 8.5% and maybe 9%. So that can have a dramatic impact.
Right, but that would affect the meeting the liability, right? But the actual obligation or liability really is not impacted by that discount rate. That's what their investments will yield in order to narrow the gap, is that right?
No, it actually does impact the liability, because it's setting the assumption of what you think your investment returns are going to be. So being that it's a defined benefit plan, so the township takes all the risk on the rate of return, depending on what that assumption is, actually has a pretty big impact on what the today's unfunded liability is.
The unfunded liability,
The
correct?
unfunded.
Yeah.
Well, yeah, right. The liability less,
So, yeah,
less the assets, so the unfunded liability.
A higher discount rate would shrink that unfunded liability, correct? Because
Right.
they're assuming the investments will yield more.
Right.
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 Okay.
And then there's a few other areas of, discretion, assume rates of payroll increase. And then there's some other things, and this goes back to what the township did 5 years ago, I guess now. The recognition that the way that unaccrued or unused leave was paid out when someone left, some of the other factors, in the calculations, recognizing some of those things. So, there is some discretion in there. There's certainly discretion with the rate of return. And those are the things that, that's the big thing the Board of Commissioners needs to do coming up in the fall, is to decide if they want to change that rate of return going forward, or the rate of return assumption.
I believe that the, excuse me, I believe that the current rate of return being used by the township is 7.5%.
Right, that's right. Yep.
Are communities in general using that? Is there any trend there? I'm just curious.
Yeah, well, good teaser for the August meeting. So we've got charts on all of that, and I think it would be best to present it, when
Okay.
we have all that data laid out.
Sure. But that is a key thing for the township to consider.
Yep.
Yeah.
Yep.
Okay, good.
Mr. Chairman, if I could, since we're on the topic, and given the possibility that folks might be watching at home, I think it's also important to, when we talk about the levers or the controls that the township has in controlling the liability end of it, is to understand that much of the liability that we're working on funding today was set in motion decades ago with various labor contracts and benefits promised in those contracts. In the last 5 years, coupled with the assumption changes that Jerry spoke on a moment ago, the township has negotiated with its civilian union, both sides agreeing to eliminating the pension benefit from all new hires from January 1, 2013 moving forward. So while that's not an immediate benefit, it is an evolutionary improvement that'll happen to the liability over time as the employees retire, the older employees retire and are replaced with a new working force. The pension liability will be coming down. And at the same time, while we're not talking specifically about OPEB, the same agreement was reached with the civilian union on the OPEB side too, eliminating that benefit from future retirees as well, anyone hired after 1/1/13. So when we talk about controlling the liability, aside from the arithmetic and the actuarial piece of it, there are policies that the township has entered into in concert with its union force to try to control it going forward.
Thank you for the clarification or addition there, Bill. That was great. And Jerry, thank you. Any other questions or comments on this topic before we move on? That being the case, our next project is software implementation. And again, Jerry, you're the lead on that.
Okay, and in a minute I'll defer to Bill, who can provide much more detail on it. But as everyone knows, that the key implementation date for the first phase was July 1st. So that was the implementation of the financial, the core financials, so general ledger and payables and receivables and so forth. And my understanding is that it went well. It's not necessarily all happening on a magic date, but over the couple of weeks before July 1st and the couple of weeks after that we're in now, various functions are being executed for the first time. And the report I got is that everything was going great. So with that, I can defer to Bill for some more detail on it.
Yeah, so July 1st came and went, and I think overall the go live has been a success. We've had some bumps in the road with receipt printing and certain account codes that were either missing or applied to wrong departments. But we've been able to work through those almost entirely with the expertise in-house. We haven't really even had to reach out to Tyler for any kind of significant fixes on their end. We've had a couple of workflow hiccups that we've been able to iron out. The one area that we continue to work on that we're probably behind the curve on is getting the actual information out of the legacy or the old database and uploaded into the new Tyler database. We have 2015 actuals in. I'm actually proofing the 2016 actuals now, and then we'll get the first 6 months of 2017 uploaded as well. The goal there is to have all of those uploaded by the end of July, and at the same time having cash values in our different bank accounts reconciled at June 30. I mean, they're already reconciled to the old system at June 30, but getting those values entered and reconciled in the new system before the end of July, so that when we close July out and we have one full month of activity, the information's in there for the bank reconciliations, and we're on pace to get that done. In terms of the major business processes, the first that went live was the over-the-counter revenue receipts, because at the moment we open the doors here, that's live. So we've been depositing batches and recording those in the general ledger now for 2 weeks, and that has gone really well. We have done 3 different accounts payable check runs. We broke them up into 3 different areas. We did our utilities first because they have a unique workflow because they don't require purchase orders. Then we did 2 others that required purchase orders to make sure that some of our new control features that were built into the system were working. And I can report that they are working to the point where it delayed the process a little bit. As part of the learning curve, again, I don't want to get too much into the weeds, but the new system requires that not only do you have a pre-approved purchase order before you are allowed to buy something, but then when those goods are received, you're required to receive against that purchase order or go into the system and record what you receive to make sure, the system is looking for a 3-way match. That the amount that you asked for versus the amount that we received and the amount that we invoiced are all tying out. So it's another layer of data entry on the departmental side. So there was some learning curve there in making sure that that got done. But once we got our first batch in there, the checks ran, and the functionality side of the software all seems to be working really well. So it's mostly good news there. I would, I'll give all the credit to Melissa Kahn. I know most of the members of this group know who she is, but she's the one who's behind the scenes leading this project. She's the one that's working with all the departments on getting them trained. She's also, as a result, the first person people call when they have questions or run into hiccups. And she has done an absolutely fantastic job of staying on top of everything that's in front of her. And then in working very closely with the subject matter experts in the finance department as well, Amy Lacey on the revenue side, Ben Cooper on the expense side, and Mary Lou on the payroll HR side. So those folks have all done their parts in making sure that they were expert at their areas to help solve problems and help the departments ride the learning curve much, much faster. So it's because of those individuals that this has really gone off so well. We still have a long way to go. The next phase is the payroll and HR phase, which was originally scheduled for the end of this calendar year. But as a result of the issues that we had back in January with our server that the old database lives on, and the fact that it crashed in January and had to be resuscitated, we decided to move that up. Well, that was the first reason. The second reason was because the go live on the GL side went smoothly. We moved up the HR payroll go live to October 1 from January 1. So the same folks that worked so hard to get us going on the GL side are now immersed in the HR payroll side. So we look forward to going live on that on October 1. And at the same time, we were able to move up our the third phase, which includes the tax, the real estate tax and utility billing part of the implementation as well. And again, the primary genesis for making that decision was the fact that we just don't know how long the server's going to last that the old system lives on. So we're trying to expedite the different phases just in case. So that's the update. It's gone really well, and again, and I'm sure you folks that have gone through these before or been part of projects like this, you would attest that it's at the end of the day, it's the people in charge of doing the work that make these a success. And Radnor's very lucky to have very good people that did their parts to make this go so well.
Well, I've been involved in a few projects like that, and so I wondered, did anybody have to clock 18-hour days or run screaming from the building or anything like that? I mean, it sounds like it went really well, but...
Yeah, make no mistake, there was a lot of work, a lot of hours. So this is something, again, that I think, Carfax, you guys have a better understanding of because we've talked about it for the last couple of years as we've ramped up to this, but the general public may not be aware that in doing this implementation, there's been no additional resources brought on. So it's the same staff that's required to do the day-to-day activities for the township that is also working to do the implementation. So it's they've all stacked their responsibilities, but again, they're very good at what they do. They're very organized, and they're committed, and they made it happen. But there were a lot of hours, and maybe one or two times someone might have went screaming out of the building, but they came back the next day with a smile on. So,
yeah, good. And overall, you think that the timeline that was set up for this project, 18 months or 2 years, that's still going to work?
Yeah, at this point, I don't see it going any longer unless we run into an unanticipated hurdle with one of the smaller modules that we still have to upload. But if the HR payroll go live goes as smooth as the GL did, we'll have the two biggest pieces of the system up and running by October of this year, which is ahead of schedule. So I don't see us going longer than the initial plan. If things continue to go the way they are, we could be done a little bit faster.
Excellent. Thanks for the report. Jerry, thank you. All right. The next item here is the stakeholders report and financial metric development, and there we have Mary.
So I'm going to talk about the I'll talk about the financial metrics first. So I think at the last meeting I mentioned that the work was completed. We had about 20 metrics, and then Bill and I were going to meet to determine of the 20 metrics, which were the final 10. So we have done that, and plan is I'll issue the final report with the 10 metrics. You'll see our town compared to other towns, as well as some commentary on how we look, vis-à-vis a particular metric versus other towns. So I'll have that completed, and I'll submit that for the August meeting, so it'll pretty much be completed. With respect to the stakeholders report, I think that Bill and Jerry have a suggestion, mainly Jerry, about maybe the approach that we take this year is not necessarily to just recreate the hard copy of the report. There appears to be some website through ClearGov that might make more sense for us to be using so that the township can get information online real time. So I think I'll pass it over to Jerry, and maybe you could elaborate on what you're thinking and what maybe the next steps would be regarding that.
Yeah, and this is really very preliminary. I mean, we just came across this website news service that has an offering that looks like it may be something worthwhile. So we just, had an initial very high-level demo. It's a relatively new product, so there's some questions about it, but just, at first glance, it looks like something that could, enhance the reporting that we're doing. But, we'll work in the working group to take a deeper look at it and decide if it's something we want to recommend that the township do.
Circling back to the financial metrics, how do we envision making this available and useful to the Board of Commissioners in the township? What are your thoughts on that?
I think the report that I'll put together will have these 10 metrics that we decided. I think it's 10, it might be 8, but I think it's about 10 that we decided were relevant. We have a 3-year history, and we'll explain what the metric means, what our metric means relative to our competitors. Well, I'm calling the other townships our competitors, not necessarily competitors, but, and then, I think then we would make that available to the commissioners, and they can make decisions around whether or not they, similar to the pension plan, where we might be talking about a target vis-a-vis the unfunded liability and making recommendations and suggestions regarding, should we fund the plan this year and lower the unfunded liability. I think relative to some of these metrics, particularly the ones that relate to the debt that the township's sort of undertaking, they could perhaps make suggestions on the level of debt, whether or not we want to be at this level versus, other townships. And so I think it's going to be up to them to decide how they want to proceed. Now, some of the metrics, I think we look very good relative to our other townships, so I think we could think about including them in this. We were going to put them in the stakeholder report, but if this is just another venue for the stakeholders report. We can also incorporate them there for members of the township to see and use for their own judgment.
So this represents a new way of observing the township's financials that, at least in any structured way, not suggesting other people haven't figured out how to look at this over time individually, but this would be we could update this with some regularity, like say yearly, and have it be useful information for the board to consider.
I think we can really only update this information annually because the quarterly financials that are produced are on a cash basis. They're not on an accrual basis. So I think on an annual basis, these can certainly be updated, and which, the fact that it's on an accrual basis, these numbers will be lodged in our audited financial statements, and therefore, you just keep an ongoing comparison, and I think the board can make decisions based on these metrics as to where they want to head relative to debt, relative to revenue, and things like that. Collections of accounts receivable, how we stand. So they certainly can make some decisions. If they feel that our metrics relative to other townships, they would prefer to be at a different place.
Mm-hmm. So this would be an additional data set they might choose to consider as they do their deliberations. It won't provide any answer or anything, but it will allow them to see how Radnor Township compares to neighboring communities and so forth.
Yes, absolutely, how we compare to neighboring communities, and then basically when you look at the budget process, where you're looking at your upcoming budget, I think that they can also take these metrics and project, if this is what the budget's going to be, well, here's where the metric, could land up, assuming we hit the budget. And I think that then becomes a guidepost for the Board of Commissioners, if they choose, to make certain decisions around certain financial attributes that are resident in the budget that they may or may not want to keep, or they may want to change. Because I think once we get this lodged and we get a budget, we can now do projections for where we think we're going to be for 2018.
Right, which is a question for Bill. Could these metrics be built into the 5-year model that we have now?
Yeah, any of the metrics that are dealing with the operating statement and long-term liabilities and debt, we absolutely can forecast those out. Those are all known numbers. So, I mean, yeah, they may not all translate dollar for dollar, and the reason why I'm hesitating is just because the metrics are pulling from the entity-wide financial statements, which is on a full accrual basis. So anytime that there's a metric involving total assets or total liabilities, those really are the only time those are going to carry absolute accuracy is after we get the audited financial statements. So those might be a little bit more difficult to forecast out. But if it's impacting an operating statement, we've got all that data. We can definitely forecast that. Same with the debt and the other larger liabilities that we report on those same financial statements.
So if the board finds some or all of these data points to be useful, it could be readily available as part of the routine reporting.
Sure.
No big deal.
Sure.
Okay. Well, from my perspective, that sounds like a nice step forward in terms of detail available to the board if they choose to use it. So thank you for spearheading this big project to gather all that data and compile it and cleanse it and all that other stuff. Thanks, Mary. Okay. The pilot review. Here we are with Mike Antonopoulos.
I've spoken to a couple commissioners from another township. One is a past president. There's no magic to this, and I really don't think there's anything that we, as a committee, can do in this regard. It's all up to the board. There's no magic. They're looking for money. There are plenty of ways to get money, but they rejected a lot of ideas about monetizing assets, so now they want to get taxes by figuring out how to get payment in lieu of taxes with the institutions. And it's going to be up to the board and the commissioner to determine how they want to approach these institutions, shake them down if there's a way to shake them down, or, because basically they're going to have to go begging, because there's no reason for any institution to dip in their pocket out of the goodness of their heart to help Radnor, period. Unless we can think of some creative way, but that's not us to figure out. We figured out a lot of creative things for the township to do. I'm not going to spend any more time on this, and I don't think there's any reason for any of us to spend any time on this at this point.
Okay. Well, any comment on that? No? All in agreement that that project is essentially complete then?
I would say it's more dead than complete.
Well, in terms of getting closure with the board, I wonder if we ought to communicate that to them in some way, just putting that up as a topic for conversation, suggestions.
Well, we can certainly draft a memorandum to the board just saying that upon reflection, and we've talked about this before in other issues, there's nothing that we can do to impact, to affect what it is they want. They came to us and said, what can you do? Well, after reviewing and discussing internally with you guys before and thinking about it and talking to another township, there's nothing we can do.
Well,
There's no recommendation we can make. There's no special recommendation we can make other than you've got to approach the institutions directly and figure out what you can get out of them. There's no magic.
right.
It's just dialogue. And who does that? If each commissioner wants to do that, or if they want to form a task force to do that, or if they want to give that authority to Bob Zinkowski or somebody else, that's fine. But it would be a waste of our time, individually and collectively, to spend another moment figuring out what we can do in this regard to help out the township, because they have to help themselves out. There's nothing we can do. Actually, what we're doing is telling them that they need to do it, so I think that's constructive criticism. Or
Mike, the pilot, or, you know, these payments, they're wholly voluntary, right? There's just out of the goodness of their heart, kind of like what you said.
Absolutely.
Do these institutions have any idea, though, the amount of expense that the township is incurring on their behalf? I recognize that we have agreements with the institutions that, you know, basically they're nonprofit, and so therefore the burden is on the township. But to the extent that the burden is becoming more significant or exceeds a certain level in a given year because of the extraordinary weather conditions that we may have, I mean, I'm just, you know, not this past winter, but certainly a couple of winters, do the institutions have any empathy, or do they recognize that it is becoming a burden for the township at certain points in time, and so therefore, if we hit a certain threshold, asking them to contribute something would not be unusual? Because, I mean, we're not trying to steal from them, we're just asking to help relieve the burden, because it's affecting many of the people that live in this town. Because if we're unable to meet the payment, you know, real estate taxes or state and local taxes would wind up increasing. So I'm just curious as to, when you speak to the institutional people, you know, who head this up, if they have any reaction to that dialogue.
Well, I think we had a discussion, and Bill can elaborate, and we talked about it in one of our last meetings. And when I think there was a situation before Villanova had their own police department, there was a reason to offset that, but now they have their own police department. There's inspections of the dormitories, but that would be a matter of really arm twisting. And Bill, you can elaborate further, but I know that they have gone to Villanova and Eastern other institutions and tried to make them aware of what's going on, but it's hard for them to quantify that. You know, in order to demonstrate that there's a reason for them to, or cajole them to pay us for something, we are going to have to demonstrate to them in a very objective manner, how this would hurt them. And that's not for us to determine. That's really up to the township and the board to determine what it is that they want to approach with these institutions and demonstrate to them that because of the tax situation, et cetera, the services that they are accustomed to would be diminished. If I were in Villanova's shoes, I'd say, show me. Now, I don't know if that can be shown in an objective manner, but what the township, what the board wants is to figure out a way to get more revenue in because they can't get taxes from the public institutions. And that gets back to the whole issue we talked about before with monetizing assets. If the township doesn't want to monetize their assets, this wouldn't even be a non-issue, right? So the point is they're looking to, you know, pull teeth from a chicken, and it ain't going to happen. And it really is not our responsibility to do that, quite frankly.
You know, I used to be around chickens when I was a youth, and I never did see a chicken tooth, so.
That's why it's difficult.
I think it is worth noting that we did inquire about the township's efforts to assure that any profit-seeking activities undertaken by the various universities, for example, were monitored in a way and any taxes appropriately collected. And as I recall, the response was that, yes, that has been done rigorously and will continue to be so. And another thing that I recall from these conversations is that, for the example that you mentioned, Villanova, I believe, correct me if I'm wrong, but Villanova created their police department at our suggestion/request because of the amount of effort required for the township to service the college community. Is that accurate?
Yeah, I don't know the exact reasons why they decided to create their department, but I can say that the township's initial position was not in favor of it. For a multitude of real reasons that were eventually hashed out both in private meetings with Villanova and publicly with the Board of Commissioners. But yeah, the initial position was not a favorable one from our police department.
Okay, I did not know that. But it would seem that them having their own police force, perhaps not comparable to our police force, but I really can't say, does lessen the burden, fewer calls on our officers, I would think. So that would seem to be a good thing.
Yeah, intuitively, yes, you would come to those conclusions. There's, and again, I'm not in law enforcement,
Right.
and I'm not an expert in this area. Some of the concerns I recall being discussed were the manner in which incidences were reported, making sure that there was accountability on the law enforcement side to report accurately all incidents, and some of the other jurisdictional, like where is the line drawn type of questions. As most people who live in Radnor know, there's a lot of the Villanova. I know more about Villanova, so I'm not picking on them versus the others, but there's quite a few Villanova students that don't live on campus. So a lot of the calls for service are generated outside of Villanova's property boundaries. So it was a lot of those type of questions and concerns. But those, like I said, those were all discussed and eventually worked out, and now it's there's a cooperative working agreement between the two departments that I have not heard I've not heard have any reason to believe it's not working working well. I haven't heard any complaints or problems, but.
Okay.
If I could, though, just to circle back on the discussions and the meetings with the universities regarding the pilots, we have had probably a half a dozen meetings with the three primary entities, Eastern, Cabrini, and Villanova, over the past 7 years, bringing up this topic at various points. And the discussions have run the full spectrum of all the reasons, pay your fair share, some of the more political and philosophical debates about the exemption in the first place, whether an entity that grows at the pace that those entities grow at and the rates that they charge their students is truly tax exempt. But at the end of the day, as Michael pointed out, by the law, they are exempt and are not required to pay those taxes. We have demonstrated to the universities the impact that they have on the municipal service side. The response that we've heard consistently from all three is that their presence within the community generates economic development outside of their specific existence that wouldn't otherwise be there if they weren't there. So their overall impact to the local economy is positive and generates tax dollars in that way. And I think it was referred to during the discussion earlier, but there are components to any tax-exempt entity that may not fall under that charitable purpose, and any of those business activities are subject to tax, and the township is reviewing those and collecting those taxes on an annual basis. So I'm not speaking to any one in particular, but across the spectrum on all of the tax-exempt entities in Radnor, there are a handful that do pay on those type of business activities.
Well, we discussed one way to get additional monies in, whether it's from a nonprofit or a for-profit, and that's basically, and other townships do it, is when you want to develop, you've got to contribute a certain percentage of that development to infrastructure or whatever. I mean, it's a tax, for lack of a better word, but it's a tax. Unfortunately, that has not been something that the board has ever wanted to adopt. And I think they discussed that with, that idea floated, correct me if I'm wrong, with Villanova's construction, which would have been a perfect opportunity to get some additional monies in, but I think the members of the board didn't want to take that path. But that's a broader issue that the township should look at. I know two other townships, they get a tremendous amount of money on every development that's going on. And that's what Biomed was going to do, is they were going to contribute, not because they were asked, but they were going to contribute a lot of money for infrastructure, which would have been a great thing. Not to dwell on that, but so that's one thing I think the township, the board can look at, is any future development, figure out a mechanism to, tax not the right word, but to generate additional revenue for the privilege of being able to develop, and that's not unusual. That's not unusual. I remember way back when in the 80s in Upper Marion, Prudential was building Freedom Business Center right where American Baptist Churches was, and they had to, back then, it was 84, they had to contribute $2 million for roadway improvements. That's just what they had to do if they wanted to get the necessary approvals. But it takes a little bit of a spine to be able to do that. And if the powers that be don't have that ability to want to strong-arm people for the purposes of the good of the township, and it's not strong, it's just good business sense, then, you know, there's not much more I can say. Mm-hmm. I mean, if you don't monetize assets and you don't go after trying to tap into development opportunities and get some revenue that way, if you choose not to do that, the only way to generate revenue is to tax.
Well, that certainly is the choice of the people elected to govern the township, and that seems to have been the pattern in the past. And so I'm sure that they gave that a lot of thought and chose the path that they thought was most representative of their constituent views. So, so we can have our individual assessments around those things, but certainly from a business standpoint, which is where CARFAC comes from, it may have looked as though there were some missed opportunities. But, okay, well, so I think that the memo to the board then should, you know, in addition to concluding that there's not much that CARFAC can do, there may be some points for the board to consider in its future considerations as development happens, and that might be one of them.
The two things, they have to come to an agreement as a board and how they want to approach new development. Number one. Number two, if they're going to go after Cabrini, Eastern, Villanova, to try and convince them to donate, give money to the good of the cause, they've got to empower somebody to do it, one individual. It's not 7 board members that are going to be doing it individually trying to make this happen. They have to empower someone to speak on behalf of the board and try and make something happen. But again, unless you can convince them what's in it for them, or what's not going to be in it for them if they don't help, I don't know what else you can do.
Let me just, in fairness, I'm just looking down the street at the Villanova development, just because it's easy, it's in front of us and we deal with it every day. There are statutes and township rules and laws that are applied as to the development of that land. If Villanova follows the rules and does everything that they're required to, where would the township's leverage be in saying, hey, we're not going to approve this? But they can't do that, right? Because they have to follow the laws.
Well, I don't know what the laws say or don't say. All I know is it has to be uniformly applied. I mean, you just can't cherry pick and say, Villanova, you're going to have to do this, and Cabrini, you're going to have to do this. You have to say all new development.
Right.
Because new development is neutral. So you say all new development that's done in the Radnor Township, for every dollar that's spent, there's going to be a percentage of each dollar spent that's going to have to be earmarked to the township, whatever, however you want to earmark it.
That would then apply to the homeowner who wants to put an addition onto his home then as well, right?
Now, you're talking about commercial development. You're not talking about residential development. You're talking about large-scale development. The board would have to take a look at that. I mean, there may be prohibitions, just like we found with monetizing some assets. You can't do it because of the orphan's court, et cetera, et cetera. So those are all issues that have to be raised. All I'm saying is that there are other townships that have made a lot of money in framing that kind of tariff, if you will, for development to be applied to infrastructure.
Makes sense, yeah.
Now, if they wanted us to take a look at evaluating that, I think we could. I really don't want to get into that, because if history is any lesson, that's something the board needs to do. When it comes to that kind of stuff, revenue, and that's something that's very near to them, and I don't want to spend the kind of time we did on monetizing the assets to come up with an idea, and then they say, no, we don't want to do that.
Certainly. As I think about this, this idea of, we use the term tariff, I don't know what the appropriate term would be, but some contribution in addition to the transfer taxes and some of the other fees that are normally applied for inspections and so forth, which by themselves can be substantial. But when you have a new development, there's going to be more wear and tear on the infrastructure, certainly the infrastructure around that development. And so anticipating that and asking the developer to kick in some money to make improvements for traffic flow or just repave roads or whatever, does seem to make sense to me. If that is not undertaken, as it is apparently in some townships, then it would fall to the township as part of its routine maintenance to pick up those expenses.
Bill, just a quick question. Remember when we were looking at that one caterer for the Willows? I remember we were going to charge them X amount of dollars as a project management fee for Norsini and others to oversee the construction process. You remember that? Mm-hmm. How much time did the township spend, or is spending, on overseeing the Villanova development?
Well, okay, so specific to that project, the township has retained an inspection firm. And the cost of that inspection firm and their services to that site is paid for through escrow that is put up by Villanova University.
But
And that's consistent across all major development projects like that throughout town.
yeah, but notwithstanding that, how much more time is being spent by township employees that otherwise wouldn't have to be spent if it weren't for that development?
Yeah, there is significant amount of time in both our community development engineering time. In the interest of fairness, again, Villanova did have to pay all of the permitting fees that are required by the Radnor ordinances on that end.
Well, that's-
And those fees are meant to cover that kind of staff time and service. But to jump back to the conversation we were having about the improvements that are asked, that the township would ask a developer to install as part of the project, I mean, that's where the correlation lies. Typically, you have a major development project like Villanova or the proposed biomed development, the discussions around the improvements that were being asked were meant to address the topics of additional traffic. Typically, when someone redevelops, it's not in kind. It's usually an expansion of some sort, which brings extra cars or extra trips through the town, at least through that specific area that's being developed. So if a developer's asked to make infrastructure improvements to accommodate the higher traffic counts, or some of the underground infrastructure, if there's larger underground sewers needed either for sanitary or storm or both, then it's not unusual to ask those developers to make those improvements too. And then, obviously it gets a little grayer, but when you're talking about impacts to the road infrastructure and traffic, the impact usually spans well beyond the specific site. So you could talk about intersection improvements that may be a couple miles down the road, but that they're going to be impacted from the trips. So that's why typically when those development projects come in and there are conversations or requirements made by the government, the municipality on the developer, it's tied to those kind of infrastructure improvements. And then at the same time, the developer who's investing all that money into their site amortizes those costs over the life of the asset. So when you tie it to an infrastructure, it provides them the opportunity a longer period of time to amortize that on their own record. So just to add a couple points to that discussion as well.
Mm-hmm. Well, I often reflect on how universities or, for instance, Gettysburg, one of my favorite places, they have the national park there, and that's an economic anchor, and that just is never going to go away, and it's going to have appeal in future generations. People want to go see this magnificent park where so many things happened. So in terms of people who live there and businesses and so forth, it's a great thing. Gettysburg is not going to go up and smoke like upstate New York, where I grew up, has become deindustrialized, and it's basically an economic wasteland. And we're blessed to have 3 universities in our area and many fine businesses. So, these are fine points, and I think it's pretty hard to measure that economic impact of all these institutions, but it certainly is there. So, anyways, anything else on this? Okay. Well, thank you, Mike and Bill. And in terms of the credit rating, Carl is not here this evening, could not make it, so we have no report. And the audit project is complete. We devoted a meeting last month to that, and so that went very well. So that completes the project updates. Bill, would you like to take us through the quarterly and year-to-date update, please?
I would be happy to. So if Ian, you could switch over to my laptop, we'll step through. This, as I'm getting this set up, this is the same presentation that was provided to the Board of Commissioners. Sorry, I had to reach that wire. The Board of Commissioners on Monday night. It's up on the Township's website now. And it consists of our second quarter of 2017 results. So we're at the halfway post of 2017. And what we'll do is we'll step through the general fund. We've got the second quarter numbers as well as how we think we might look for the full year. We added a new section to this analysis versus prior quarters where we're taking we include year-over-year comparison graphs. As I told the board Monday, I don't intend to go into a lot of detail on that during the presentation, but it does help provide another angle to see trends in the numbers and what they've looked like over the last 4 years. And then we'll take a look at the sanitary sewer fund and the stormwater fund, as well as how our pension assets have done so far this year. So for the general fund, on the revenue side, overall, they're trending ahead of expectations. As is usually the case, there's mixed results on that. On the expense side, on the aggregate, things are in line with what the board set budget levels at. We do have a large variance in the engineering department. I'll go into more detail on that. But on the revenue side, taxes, all the different types, including real estate and the Act 511 group are doing very well. Development permitting revenue is very strong. We anticipated that with the budget this year based on the development projects we knew about, and it's performing as anticipated. Recreation revenues, as they usually do, are hitting their marks. And then police enforcement and parking, as they usually do, are lagging a little bit in where we set estimates at versus what's actually coming in. And there's some reasons for that I can get into in a little bit. We got into it pretty deep on Monday night with the board, so it might be relevant to kind of touch on those same points tonight. Then again, on the expense side and a little bit more, some of the highlights include payroll and related costs are below budget by about $253,000. I wanted to make sure we highlighted that. We anticipated that. In the late winter, early spring, the board adopted a administrative reorganization, and at that time, there were certain elements of that we anticipated cost savings on. So we're reporting that we are indeed realizing those savings, as we could see payroll coming in less than what was budgeted. We do have the large variance on the engineering department. I touched on this with the last report. It's a result of we fell behind on paying some 2016 invoices, and those were caught up in the early months of 17. And since we are reporting on a cash basis, those have created a large negative variance in that department for this year. And in all likelihood, on the expense side, that won't change before the end of the year. So looking at the actual numbers on the general fund revenue side, you can see that the total revenue for the year is anticipated to be about $34.3 million. At the halfway point, we would expect to be somewhere around 78%. We are actually at 84% collected, which puts us 6% or a shade over $2.1 million ahead of expectations. And I'll get in a little bit more detail as to why, but we anticipate that though being ahead of expectations should stay through the rest of the year, and we'll end that way as well. As we look at the remaining months, significant dates, obviously summer is an important time period for our permitting revenue. A significant amount of revenue is anticipated from just the normal development. Homeowners putting renovations on, smaller commercial developments. The larger commercial developments we know about and are able to predict that income. It's the smaller ones that come up throughout the year that we anticipate, but obviously we have no control over whether those actually come in, but so far this year they are. And then with the business taxes, October is the last big hurdle there, as folks get their extensions filed, and any variance amounts or any catch-up payments that are due, those are also made at that time. On the expense side, the expense budget is $34.8 million. And I touched on this Monday. It's important to point out that that $34.8 million includes encumbrances that were carried forward from 2016. So if you were comparing the revenue and expense number, it would appear that the expenses are higher and we are out of balance with our budget. But that wasn't the case when the board adopted the budget. There was actually an $84,000 positive net revenue. What happens when an encumbrance from a prior year gets carried forward, it brings with it the cash and the budget that were both set aside in that year for that expense. That encumbrance, it comes forward with it into the next year. So any encumbrance that was carried forward from 2016, there was cash in the fund that was also not spent in 16 that is now being spent in 17. So it washes itself out that way.
Bill, excuse me, say what an encumbrance is?
Sure, yeah. An encumbrance is basically a purchase that has been authorized through an approved purchase order. It could be something as simple as the fuel that the township uses in December that we encumber for in December, but the actual invoices don't come in until January of the following year. Or something as significant as the Clement Crone Park project, where we encumber $7 million or almost $1.7 million over the course of 2 years. So there could be an encumbrance of $1.5 million coming forward from one project. So it could be anything as significant or insignificant as that. But on an accounting sense, they're treated the same. We would expect at this point to be at about 46%. We're actually at 47%. There's the $77,000 negative variance. The second bullet point under the key points it highlights the primary reason for that negative variance, and that's in the engineering department. Across all the other departments, and we'll get into a little bit more detail, the numbers look a little bit better. As we go through the rest of this year, however, we anticipate that $77,000 variance being absorbed through other cost savings. So we'll end the year under budget as we always do. Taking a look then at the net revenues, which is basically our revenues minus our expenses. I pointed out a moment ago, when you take a look at the full year budget number it's a negative $552,000. The general fund carried forward with it roughly $620,000 in carry forward encumbrances. So that's why the budget went from roughly 84,000 positive to 552,000 negative. It's just those carry forward encumbrances. We would anticipate at this point having net revenues of roughly $19.3 million. We're actually at a shade under $23 million. Again, the positive variance is the result of revenues doing better than budgeted and expenses basically being in line with what was budgeted. And then the line graph indicates where the general fund cash is, or net revenues are, both forecasted and actual to date. You can see that with the real estate taxes and the Act 511 taxes coming in primarily by the end of May as the high water mark in terms of net revenue, and then we eat into that for the remaining months because there is no significant revenue
Bill,
that comes
so
in over that time period.
For purposes of clarification,
Sure.
net revenue is 100% taxes.
No, not necessarily. There's the permitting. There's permitting revenue as well as other departmental revenue that contribute towards the overall.
What percentage of the net revenue would be non-taxes?
Roughly 30%, maybe a
much?
shade under.
Okay.
Yeah, permitting revenue is pretty significant. The revenue that the police department generates is pretty significant, as well as the recreation department. And then the township does also receive funds from the state interest revenue and some rental income that we get in this building and some of the other areas. So that adds up.
But that 30%, is that historically been 30%? Because that's more of a variable cost than a fixed cost.
It has remained, the annual revenue that comes in from that category has remained relatively consistent. Its percentage to the overall revenues has been shrinking over the years because the business tax component of our revenue makeup has been growing at a much, much faster rate. To the tune, business taxes 5-6 years ago were roughly 8 million, and now they're over 14. Whereas the departmental or non-tax revenue has remained relatively consistent, just like normal cost of doing business type growth. Real estate taxes in a little bit more detail. As I pointed out, at this point in the year, we will have collected almost all of it. As you can see, the target is 96% or 12 million. The full year budget is 12.5 million. The remaining $500,000 that we would normally collect over the last 6 months are delinquencies, people that didn't pay on time, or settlements of houses that are carrying old real estate tax liens on them settling, as well as any of the interim real estate taxes that are paid on improvements done mid-year that the county assesses. But there's no reason to believe why we won't hit the $12.5 million number on the real estate taxes this year. More importantly, the revenue group that, as CARFAC is aware, has the most volatility, the Act 511 group, which consists of our business privilege, mercantile, local services, which we refer to as LST, and it also includes the real estate transfer tax. This group, there was some pessimism around this group last year as a result of the business privilege and mercantile not meeting their estimated revenue marks. Being that this is a lagging revenue because it's based on activity from a year ago, and that there isn't a whole lot of good data that we have access to that gives us any insight on how we're going to do year over year. When we put the budget together, there was some concern that we were perhaps aiming too high. But as we sit here at the end of June, the group is $450,000 over estimates, which is 4%. So that's definitely a better place to be in versus the alternative. And given the fact that the primary due date for the filing and payment of most of the revenue in this group was May 15th, we anticipate that the regular income that comes in for the remaining 6 months, actually over the years, even including last year, has been very consistent. So we anticipate that this trend could hold, and we actually beat the expectations this year by roughly 3% for the group. The one revenue category in this group that's underperforming is the mercantile tax, and it's $227,000, which is not an insignificant amount. So it's not all good news. I mean, there is that percentage or that particular revenue. In terms of magnitude, the mercantile represents around $1 million, $1.25 million in total revenue. By comparison, the BPT is over $8 million of the 14. Actually, the mercantile is closer to $1.5 million. But so the township's much more reliant on the BPT side versus the mercantile. But this group is doing better than expected. Yes, sir.
So that's not to pick the one negative, but, that's a fairly large miss, right? Almost 20%. How that happen?
So when we are putting the estimates together for the taxes that are based on gross receipts, so that's the business privilege and mercantile, really the only real indication that we have to go on is prior years. And assuming some sort of either growth or decline based on that. You can make some loose correlation to overall market conditions and other types of factors, but we have not found over time that those are reliable. So again, this is lagging information that those mercantile taxpayers are paying off of activity from 2016. So there's really no way to nail this with any kind of pinpoint accuracy. So I mean, at the end of the day, if that holds, then it's a situation where that would be 2 years in a row where mercantile missed, and it would cause us to be a lot more conservative going forward on how we estimate that revenue.
Just a follow-up question on that point.
Absolutely.
Have any of the mercantile taxpayers left the township or ceased business operation, or would this be more a decline in the volume of their transactions from existing merchants?
Yeah, there, in a very general sense, there's always a lot of fluidity to this group because it is retail activity. So businesses are closing, opening, moving in, moving out on a fairly consistent basis. And at the same time, there's not a, whereas on the business privilege side, there are a handful of businesses that carry a larger weight of the total. This is spread out a little bit more across all taxpayers. So there's nothing that would tell us that, you know, our number one mercantile taxpayer left town, so we should be concerned. It's more of a group effort.
Okay, so basically our estimates were higher than actual, and as you said, perhaps going forward, be a little more conservative if we have at least a 2-year trend here.
Yes, yes. And there's other data points that we do have. We have the number of filers, the number of taxpayers that we can track over time. We have the number of delinquent filers that we could track over time. The one data point that is suggesting that we should be more conservative on the mercantile side is that the number of delinquent taxpayers ticked up. So one thing that'll happen over the next 6 months, those taxpayers will be notified by the township, and we'll learn one of two things. Either they were delinquent and have to catch up, or they moved out and they're delinquent because they're no longer a filer. But those are things that take months to iron out. And that's the phase of the administration that we're in now, is circling back around on the delinquent filers. So we talked about this group a little bit earlier, the non-tax revenue. 7.6 million is the total for the general fund. We would normally be at about 50% or 49. As I pointed out earlier, we're doing much better. We're at 69%. So that 20% positive variance equates to roughly $1.5 million. We included in our forecasts with this year's budget over $1 million of anticipated positive variance from the Villanova project. So while this is ahead of what the estimated revenue was, it was something that we were anticipating. But it is turning out to we're realizing the gains that we thought we would get on this, and then some. As June was another particularly strong month for the building and related permitting activity. As I noted earlier, the recreation revenue is strong. The engineering escrow, I think I went into some detail with Carfax on the last presentation on how that works. As a result of being behind on billing, that also put us behind on going into those development escrow accounts and reimbursing ourselves. So that's something that we continue to work on. The escrow reimbursement side, I'm more confident we'll catch up on and reduce that portion of the variance by the end of the year. Whereas on the expense side, it's kind of a fixed number at this point. There's little we can do to close that variance. That's cash out the door. So that variance will exist through the end of the year, but that's on the expense side.
Bill, excuse me, you mentioned that you were behind on the billing. Would you explain that a bit?
So, yeah, real quickly, the way that the escrow piece of this works is that, and we talked about it with the development, the Villanova development project, is the township has certain expenses, professional expenses incurred by engineers, inspectors, and inspectors. And in some cases, our solicitors involved on projects too. Anytime that the township incurs those expenses that are directly billable back to a project, we require that project to put up escrow at the outset of the onset of the project, and then as those professional invoices come in, the township pays the professionals that we're retaining, and then we go and reimburse ourselves from those escrow accounts. And the primary reason for doing that is it is a little bit more expensive on the developer side, but it's not unusual for governments to do this because it's ensuring that the general tax-paying group or population is not having to subsidize those professional service costs that are being incurred from one development. It's making the development pay for those costs. And a lot of those costs are necessary to ensure the building codes are being followed. So it goes back, I mean, the root of it is the life safety aspect, making sure things are built to code, infrastructure is installed, sanitary sewers are plugged into the correct line, stormwater's running the way it should be running, and the like.
Okay, so thank you for that. So this is a systemic, it's an aspect of the way the system operates? No one fell asleep and forgot to send invoices or something, right?
Well, okay, yeah, so
That's what I'm getting at.
specific to the problem here is that we, the township, fell behind in paying our outside engineers for work that was specific to various projects in 2016. We caught up on making those payments to the engineering firm in February and March of this year. Then, or now, we are working on going back to those various escrow accounts and reimbursing for the late payments that we made in February and March. So the cause of being delayed in collecting the engineering escrow is because we were late in paying the invoices. And that's always the way that's going to be, because we do not go after the escrow money until we've already paid for the professionals. It's not an upfront payment. So there'll always be a lag to the escrow reimbursements.
Thank you.
Sure, yeah. Moving along then with the police enforcement, the enforcement and the parking are both lagging our estimates. And we got in a little bit of detail on this Monday night, so I'll just spend a quick second and give a summary here as well. We talked about, on the enforcement side, the parking ticket is the overwhelming majority of that revenue. I think we've talked in this committee in prior years about how little the township gets from the moving violations that are issued by the police department, with most of that going to the state. So the revenue generated here is almost entirely from the parking, and it's a matter of we had some months where we were down personnel, so the enforcement wasn't it didn't have the same coverage, but at the same time we're experiencing higher compliance with parking. There's not as many spots that are going unpaid with cars in them. Which I think, and we laughed about this Monday, is probably a good thing, and that's, at the end of the day, that's what you want. So that's why the enforcement is down. Then the parking revenue itself from the kiosks is down, and there are very specific reasons why. The primary reason being that there's various construction projects that have gone on throughout Wayne this year that have consumed parking spots and taken them away from paying customers. So When we talk about the South Wayne parking lot, more than half of that lot has been taken away because of the library construction project, and that'll be the case until the library opens up in early 18. There were periods of time on North Wayne where PECO was replacing their lines underground, so parking was taken away there. And then there's ripple effects over on the AT&T lot where portions of that lot were designated for, like right now, the library patrons get free parking in certain spots of that lot because the library is temporarily located in that strip plaza right next door. So there are very specific reasons as to why parking is down. You couple that with some of the policies that the township has, including the 10-minute free on the back end of paid transaction, which we talked a little bit about at the last CARFAC meeting. The additional advertising and posting of that is going to be put out by our police department. So if anything, we would expect people to take greater advantage of that with the additional publication of the benefit, which will have a negative impact to parking revenue. And then the biggest piece of parking revenue or policy that takes the most parking revenue out of the program is the discounted parking given to the businesses that they in turn give to their employees. So their employees aren't paying the full parking freight, they get a discounted rate, deeply discounted rate. So so that's a very, very long way of me saying I'm not that surprised that parking revenue's down. The one request that came from a commissioner Monday night was that once we have a period of time where parking is more normalized, to report back on the whether or not the increase in revenue is being realized from moving from the meters to the kiosk system. And we just haven't had a period of time since the kiosks were installed where we've been able to do that analysis yet. And that won't be the case still for at least another 6+ months because the construction's still going on.
Bill, I think we talked about this before. Have you done any analysis, or if not, when could you do an analysis of the payback on the cost of the kiosks relative to its relative increased revenue? So is there a payback 5 years, 6 years, 10 years, 20 years?
Sure. Yeah. The analysis can always be done. We're just not sure when we'll be able to have revenue, because when the decision, and we talked about this Monday night too, and it's important for folks to remember that when the decision was made to move from the meters to the kiosks, the primary reason was that we were looking at a $500,000 cost to replace all of the meter heads anyway. So it was a discussion of spend $500,000 on meter head replacement or spend $500,000 on doing kiosks. And the trend across the country was moving towards kiosks, and all of those reasons were bulleted out. So the specific discussion of achieving some return wasn't necessarily at the top of the list.
And doesn't even, after what you just said, it doesn't need to even be on the list.
Well, what I was going to say then is, on top of that, when we made the decision 1.5 years or 2 years ago to go with the kiosks, the library project wasn't imminent. We certainly didn't know that PECO was going to have the problems they've had on North Wayne and require the work that's been done up there. So there are variables that that would have eaten into that ROI anyway. And then the last bullet point I have here is that the cable franchise is running a little bit behind what we normally see. And I felt like it was important to highlight that just because normally the cable franchise is very predictable and something that it comes in consistently. So this is the first time in my 7 years here in Radnor that I've seen any kind of variance there. So it's something that worth keeping our eye on. All that being said, by the end of the year, we expect to beat the expectations in this category by the 20%, primarily because we've already received most of the money that's going to generate that positive variance. Switching gears to the expense side, the general government group, we have the administration, finance, treasurer, and the IT. The negative variance in the administration is the result of higher than expected labor bills. Most of that being the, I'm sorry, I said labor, the legal bills, most of that being labor counsel. Earlier this year, the township negotiated replacement agreements with, or an replacement agreement with our rate union. And we also, at the same time, negotiated an extension with our police union. When we put the budget together for this year, we didn't anticipate quite the level of expense that it ultimately took, keeping in mind that with the rate group, we were able to successfully negotiate a complete overhaul in our healthcare program for all the non-uniformed employees. And if you'll indulge me, I'll just take a second to explain that. And I give the rate folks a ton of credit, similar to a couple years ago when they agreed to forfeit or give up the pension benefit to any of their new hires. They saw the larger picture benefit of switching our healthcare program from what it used to be to a high deductible plan, where the township, not this year because there was some cost of implementing the new program with the health savings accounts, but starting next year, we're anticipating realizing savings of over $400,000 in healthcare premiums as a result of making this switch. So it took a lot more time in negotiations to make sure that everyone felt comfortable with the program, but at the end of the day, the savings as a result of the new healthcare is going to far exceed the additional costs we incurred for Labor Council helping us negotiate it. And then on the IT side, the negative variance there is we had the server crash in January. That was an immediate $12,000 expense that we weren't anticipating. And then every month we're paying Allura, the third-party company, to work on coming up with a contingency server plan in the event that the old server that the old finance data is living on does crash. Without getting too technical, we're asking them to try to come up with a way to virtualize the data that's sitting on that server, which right now it's in a solid state, sitting on the server and taking up all the space of the server. So all of our new IT is virtualized on more up-to-date servers. So we're trying to get data that's 15 years old to live on a server that's brand new. It's like sticking a brand new V8 in an old Volkswagen Bug. It's just it's taking some computer engineering to figure out. So we are incurring some costs there. But at the end of the day, that server is going to crash. It's just a matter of when. So if we're successful in getting that information off of that server and onto the new ones, we'll see no disruption in our ability to go back into history and pull information off the old database. Protections to persons and property. This is the folks that keep us safe. There's positive variances in each of the departments. Mostly as a result of savings being realized through vacant positions, payroll turnover, and actually in the police department, we're doing better than expected in overtime, which is not usually the case, so that's good. And then the Emergency Operations Center, we have not needed it this year, knock on wood, but so that cost center is zero right now. Our Public Works group, we have some negative variances here. I'll jump to the big one. That's the engineering. That's the one that I've talked about in this presentation. Like I said, I think most of that is going to end up sticking with us for the rest of this year. We'll chew into some of that because those numbers are net of the escrow reimbursements. So as we start catching up on the escrow reimbursements, that $419,000 variance will come down. It's just going to take some time. And then the negative variance in the building and grounds is the result of overtime costs to clean this building. We had an injured employee that would normally have been doing it out on long-term leave. So overtime was needed to catch up. We're actually in the process of bidding that service out to a third-party company, which will help reduce the overall costs. Because, again, without getting too into detail, there were a couple vacancies over on the park maintenance side. So the employee that was dedicated to this facility before has been reassigned to fill one of the vacancies in park maintenance. And at the end of the day, when we have a third-party company in cleaning this building, there'll be a net savings because the third-party company will be less than the employee that was designated here. So at the end of the day, it'll be a savings to the township. And then the highway variance is a multitude of issues, but by the end of the year, we feel like those will work out because of other savings that we're realizing.
Bill, the variance on the engineering is, the 419,000, is that about what you'd attribute to the timing difference? Or?
Yes, so about half of it is in the payments that we made to the contractor in February and March. And then the other half is, well, it doesn't quite work out quite half and half. So there's also a variance in some additional projects that the board authorized for some sidewalks that we didn't budget for. So there's, let's say, roughly 50,000 that we own from decisions made this year. The remaining variance is the result of a combination of the payments made to the engineering firm in February and March, compounded by the lack of escrow reimbursements to date. So those are the two primary components.
Yeah. So if there's roughly 250,000 is what those payments were in March that in previous years would have been made prior.
Yeah, 200 is probably a closer estimate.
Yeah.
But, yeah.
So that the impact in terms of the undesignated fund balance at the end of 2016, you could say that 200,000 of that is attributable to that timing difference, I guess, right?
You could, yes. Ideally, we would have had purchase orders encumbered and brought that cash with us, but in this case, that didn't happen. But you could say that we ended up $200,000 better off at the end of 16 as a result of that timing difference, yes.
Yeah, okay. So, and to the extent it's going to impact 2017 in the opposite direction, I guess one way to look at it, particularly when we examine that undesignated fund balance, is to say, to back off 200,000 of it and really look at it that way.
We could. I would anticipate, however, when you look at the general fund in total, that we will have enough savings in other areas of the overall budget that will more than make up for this negative variance here.
Okay.
So at the end of the day, the general fund expenses in all likelihood will end under budget, even with this kind of variance out there.
Mm-hmm. Okay, thanks.
And honestly, this is one very specific, unique circumstance, but it's not unusual over the course of a year to have some line items that go significantly over. For example, we've had winters in the past that caused snow to be hundreds of thousands, snow and overtime. The salt, not the snow, the salt to remove the snow, and overtime to be hundreds of thousands over. And last year, at this point, I was reporting there was a $110,000 workers' comp settlement payment that we had made to avoid a disability retirement. So that was a large variance. But when you aggregate the entire fund, there are usually enough savings in the other areas to make up for it. Parks and Recreation, the one tree removal variance is the result of, we did a project over at Hartford where there were a number of hazardous trees that were removed. So there was one lump sum $25,000 expense incurred that we wouldn't normally anticipate because the tree removal program is more of an as-needed type of line item. As dangerous trees are identified, they're removed. So the estimate year by year is in the ballpark of 100,000. Some years we do better, some years we do worse. This year we're trending as we're going to spend more than the 100,000 on tree removals. Sulpizio Gym is negative. Similar to this building, it's the result of cleaning. The one aspect with Sulpizio that will require a little bit better budgeting in the future is that the cleaning of that facility is not just based on normal operating hours, it's also based on activity. So if you have a Friday night program there, you either need to bring someone in Friday night or early Saturday morning before the Saturday programs start to clean. So there is an element of overtime that's part of that operation that historically we have not budgeted, but moving forward, it needs to be part of the program. It's not significant. The planned overtime is less than the 21,000. Most of that 21,000 is the result of the injured employee, but the variance doesn't need to be that high. And then the last group is the all others, most of which consists of the township's contribution to some of the private entities or private nonprofit entities in town. The library variance will be resolved as soon as we get the insurance reimbursement for some mold remediation that was done at that facility that was found actually as a result of the larger improvement project. So that was one of the silver lining benefits of doing the larger project is we were able to uncover a significant amount of mold damage in the lower level and get that fixed. The community organizations, that variance is the result of higher than expected revenue sharing from parking revenue, which again sounds, again, because I talked about this Monday night, but it sounds contradictory to our discussion earlier about how parking revenue is down, but the lot that we're referring to there is the North Wayne lot behind the Wayne Presbyterian Church and the Senior Center. That's actually one lot that there has been no negative impact to it. It's been operating at full capacity. So our revenue share with the Wayne Presbyterian Church on the land that they own is a little higher than expected. And then the insurance and retiree benefits, it's a $4.6 million cost center. We transfer those funds out a little bit on an as-needed basis. I think in an ideal world, I'd like to get to a more regular month-by-month allocation. What that's paying for is the 2017 premiums for the health care coverage of our retirees, as well as the amortization of the amortization on the unfunded portion of the pension. So those two amounts get transferred out of that cost center and go to those two different areas. So by the end of the year, we will have transferred out all of that $4.6 million. It's just at this point, we haven't been doing regular transfers. The primary reason being that we're waiting for go live. And once we're up and running with a little bit more regularity in the new system, we'll get that money moved out. And then the other, it's a very insignificant variance, but I missed, when we put this year's budget together, roughly $6,000 in expenses that we pay to our different paying agent banks for our bonds. So at the end of the year, we'll be at about $6,000 negative variance there just because the budget was missed. But that's, in a $34 million budget's relatively inconsistent. So this is the new section that has some year-over-year comparison. Again, I'm not going to spend a whole lot of time. If someone wants to go and really take a look at it, it's up on the website. This just provides, like I said, another layer of context to our revenue numbers and expense numbers to see trends over time. Specifically, on this tab, if you take a look at the mercantile tax, I know folks at home won't get to see this, but if you're, you could see that there's a trend developing there, and one that we should probably pay attention to, whereas conversely, the business privilege is behaving this year in a little different than it had in the past, which is why we have an unexpected positive variance. But those are the kind of observations you could make where these graphs are helpful to the overall analysis. The building permits, you could see that there's a spike this year because of the one-time revenue. I referred to earlier about the regular growth in the departmental earnings. So you can see that it has been growing, but at a more slow and regular pace versus the taxes that kind of jumped up. And then the same on the expense side. You could see any kind of jumps either way in terms of expenses. Keeping in mind that most of the general fund expenses are payroll and related, so it's not unusual to see regular growth in our departments that are almost entirely made up of payroll. I will note that with the police department, there's what appears to be a large step up. That is the result of hiring a whole new crop of replacement police officers, and B, Carfax aware of the OPEB funding plan that we have, and that under the new FOP agreement from 2013, that any police officer hired after January 1 of 13, they're still eligible for OPEB benefits at a significantly reduced benefit versus the folks that were hired prior to January 1 of 13. But the OPEB funding plan that Carfax had recommended to the board and the board accepted and adopted dictates that we pre-fund those OPEB obligations as those officers are working here. So we are not growing the OPEB liability during their service to the community. When they retire, the funds to pay for their health care for their eligibility period will be sitting in the account for them. And one thing with OPEB that we didn't get into earlier is that the predictability of OPEB is a lot higher than it is with pension. There are less assumptions and less variables that go into the forecasting of that. So there's a little bit higher confidence that the assets set aside for OPEB for those officers will meet the expectations when that day comes and they retire. And then this is the last slide for this section. We included a summary that has the operating revenue, operating expenses, the net revenues, and then the total operating. The only difference between these two categories are the transfers out of the general fund to the other funds that are necessary to pay for debt, mostly for debt and capital. So that's why there's not a whole lot of variation between those two different categories. But you could see that revenue is up versus prior years, and expenses, aside from the step up from 2 years ago, are in line with where they were a year ago. So that's the general fund. So we'll switch gears to the sanitary sewer fund. At this point in the year, we have billed and collected what we would expect to be roughly 97%. We have actually collected 98, which is a little unusual. This is another revenue category that had struggled in years past, but for this billing cycle, it met expectations. So that's good. And at this point, we would expect that the straggling payments that will come in over the next 6 months to the tune of about $100,000 will come in. I added a little bit more information to this slide than prior quarters because the fund balance has become a particular concern. I don't know if you guys are aware, but there was a major line on King of Prussia, sanitary sewer line that failed, and actually portions of King of Prussia are closed as we try to replace that line. The estimate for that emergency repair is creeping up near $2 million. So as you can see, there is not enough in our sanitary sewer fund in terms of its fund balance to cover the cost of that repair. So we're coming up with some recommendations that we'll present to the board. I think there's general consensus amongst the commissioners and the administration that the sanitary sewer fund at the end of the day should pay for the entirety of that project. It just may be that the general fund has to loan it money or some other source of financing to provide a gap between now and when the sanitary sewer fund might be able to repay. And along those same lines, and even going back to the special meeting the board had a week prior, there was significant conversation about that fee level and the overall plan for infrastructure replacement going forward. So that'll be a significant part of the upcoming budget discussions.
Yeah. Bill, two questions on the sewer fund. So the for King of Prussia, I heard Monday night talking about the $2 million. So am I recalling right? Initially, it was more closer to like 1 million?
Yeah.
Did it, okay, so creeping up was, it really, I just want to make sure I didn't miss the number,
Nope.
so.
The initial estimates, and understand the initial estimates were within 48 hours of
Right.
of the finding the problem. As they have dug a little deeper, the problem's bigger than what was expected. So ultimately, what's driving that cost up is that the time frame for the repair is a month longer than initially expected. And the primary reason, as it was explained to me, is that surrounding the pipe is gravel, and I'm using gravel. If there was an engineer here, he would feel compelled to correct me because it's not gravel, it's fill to a certain degree of stone size.
Right.
But when they burst the old pipe out and slip the new line in, gravel doesn't behave as well as dirt does. So they're anticipating, as they do that, having to dig in various areas to get the new line in. So that's just going to take more time and effort.
Right, okay.
The other big component was that it was determined that prevailing wages had to be paid, since this was not a bid project. So that immediately inflated the costs significantly.
Okay. The other question, this goes back to the special meeting, and I don't want to trigger off a bigger discussion, but just one of the key dynamics is that we bill based on water usage.
Mm-hmm.
What I was curious about, then the payment we make to RHM, that is not based on our water usage, right?
Well, it is. It's based on flow.
But
it's-
actually measured flow of the sewer system.
Yes,
So,
which is a different source, yes.
okay, so it's not, they don't use the same mechanism we use to bill the customers of the
No,
service.
but there is a direct correlation, that if water consumption from Aqua is down, the flow that we send to RHM is down.
Right.
Not dollar for dollar, but there is definitely a correlation there.
Right, although there was the big discussion, again, not to rehash that now, but the big discussion about all the infiltration and
Yes.
stormwater seepage, so that sneaks into the difference, I guess.
Oh, it is a significant, we feel, based on the condition of our sanitary sewer lines, that there is a significant amount of storm infiltration, which we're paying a fee for every time that goes down to RHM. So it not only for the federal mandate to
Right.
correct that, but also from an operational standpoint. It benefits us to improve our infrastructure to close those holes up.
Right, okay.
Finally, with regard to our fund revenues, is the stormwater fund. Similar to the sanitary, the billing and collection is all done in the first quarter of the year for this revenue. And as it's done in each of the years that we've billed for the stormwater, which I should know, I feel like we've been doing it forever, but it's only been, I think, 4 years that the stormwater fee has been in place. And every year, it has met the $1 million plus expectation. And I only mention that because I think it is significant. All political positions on the fee aside, it demonstrates that an ability to pay in Radnor, and that doesn't speak to, well, we should be charging more. It speaks to the economic health of the township. We've spent a lot of time in this committee talking about credit ratings and how we're viewed by those agencies. Having this type of fee on the books, while it gives us certain marks of having dedicated funding for a significant cost center, when a fee like this is implemented and we're able to prove over time that it meets the expectations in revenue, that bodes very well in how we're perceived credit-wise. So finally, where we stand year-to-date on our pension performance, and this question's been asked to me several times, is that we are at exactly 7.5% year-to-date, which happens up to also be our target. We've had growth in every month Obviously, you can see by the graph, some months better than others. But we have not yet, well, I'm not even going to say it because for those folks who might be superstitious, we'd rather see positive returns every month. So at this point of the year, we're at 7.5% growth, which would meet the target if the year ended June 30th. But as you guys know, and as we talked about Monday with the board, the time period for this is the calendar year. So if for whatever reason we lose all of those gains by December 31st of this year, when the accounting hits the actuarial report, it will show as though we had zero gains for the year. And then we'll have a negative funding variance that'll have to be amortized and paid in the MMO. So it's good news to be, you guys know, it's good to be at the target at this point of the year, but we still have 6 months to go.
Yeah, Bill, also, I think I watched when this was presented on Monday night. I think there was an important point. I know it was pretty late in the meeting, but there was a comment that was tying this to the MMO.
Yes.
And what didn't come up is there's a big timing difference. So it may have left the impression that when we start talking about the MMO in the fall, that this result impacts that MMO. And just to clarify, and I think I'm getting it right, so the MMO we're about to address is based on the returns in 2015 and 2016.
That is correct.
So this MMO, or this result for 2017 will go along with the result for 2018 in the biennial valuation. And so that'll be 1/1/2019, which will then be the amortization or the valuation performed in 2019 and potentially hit the budget in 2020 or maybe even 2021.
That's exactly right. Well, I by matter of past practice and policy, we'd like to incorporate the new numbers with the 2020 budget, so.
Right.
But you're exactly right.
Yeah, so I know it wasn't appropriate to clarify it Monday night, but this is Carfax. So just making that point really clear that, I mean, if we hit the 7.5 at the end of the year, that's great. It also ties in with what the result is in 2018, and those 2 years will then impact the MMO that starts in 2020. So
right.
Two budget years out from what we're about to look at.
Well, and to take that one step further, if we end the year at 7.5%, it will actually have zero impact to the MMO because we just hit what we said we were going to hit.
Right.
The only way there'd be an impact is if we were greater than 7.5% or less than.
Right.
So first we have to have gains. If we have gains above when I say gains, I mean over 7.5%. If we have those, then by 2020 we should see those. We should realize those in our MMO.
Right. Yeah. If we have 2 years of 7.5, then nothing else. If other than everything else that can impact the MMO, then the MMO would stay the same. But
well, yes, I would go so far as to say if we hit 2 years of 7.5%. The biggest benefit we'll see is that we will have made 2 years worth of amortization payments on all the other past negative variances. So we're 2 years closer to getting those variances paid up, which will ultimately lead in reduced MMOs. But you're right, that's all other things being equal, like no disability pensions or those type of things that have an immediate negative impact to the fund.
right. Then the other thing, I know we've been talking for a couple of meetings about, what's our longer term rate of return. So the 7.5% this year. So do we have time to pull up that other chart we just produced real quick? Or?
I've got time if you.
Okay. So one of the other questions, not just what's our return year to date, but what's our longer term rate of return? So this is. Yeah. So this is hot off the press. I guess PFM went back and provided this data, so it's looking at what our long-term rate of return is against the current 7.5% target. What is it? It's since inception. So my understanding is PFM provides us with year-to-date, 1 year, and 3 year and 5 year returns, I believe, and then and since inception. And since inception is the inception of PFM working with us, which goes out back, 20 or 21 years. So the ideal thing would be to see a rolling 20-year rate of return. So in other words, each year looks 20 years back, which isn't possible. But what this does, I mean, when you look at 3 years and 5 years, there's really too much volatility to see anything. But if we look at this, so essentially I think the leftmost side, the first year is essentially 2 years of return average. The third one is 3 years. The fourth one is 4 years. And then we get out to the last 1 or 2, which are finally 20-year average return. So that's why you see a lot of dispersion, and then it starts to settle down to a number. And it's showing what we kind of thought we knew, which is that it's riding down just a percentage point or 2 below our target. So the number's 6 point something, somewhere around 6.5, and the target 7.5. But this is a piece of information we've been trying to nail down for a while, and I think it provides really good information to look at what our long term is. And it's probably a 20-year, rolling 20-year rate of return is the sort of time frame we should be looking at, when we're looking at pension funds and the population that's in it.
Yeah, and that conclusion, the 20-year conclusion, is supported by the fact that the amortization for those variances, those actuarial gains and losses, is anywhere from 15 to 20 years. So you're exactly right. I guess the one nugget I'll add to this before we move on is that, and you guys know this, so this is for the benefit of the viewing public at home, but anytime there is a change in the assumed rate of return, so if the board were to ultimately decide to move off of 7.5%, either way, so let's assume first that it would come down, what is required is an immediate adjustment in the annual expense to make up for the new gap in returns that you're no longer assuming you're going to get. It's not something you have to pay in 1 year. It's amortized like all other actuarial gains and losses. But there is an immediate increase in the expense to the fund as a result of changing if we were to lower that. And the opposite would hold if that number, if the board were to elect to increase that. There would be an immediate reduction in the expense, although as we look at this graph, it might be telling us that while you might have an immediate reduction in expense, over the long term you're going to end up paying for it through the annual actuarial losses, because the assets are not going to provide you those returns that you're assuming. But that's really what we're going to hope nail down at the September special board meeting.
Bill, when was the last time the assumption was changed?
2012, the township changed it from 8% to 7.5%. And if you go back and you look at the township's MMO, the annual pension expense, you'll see that in 2012 it jumped up considerably from where it was in the prior years with the higher rate of return. So it's the age-old pay me now or pay me later approach. But I think the conversation started back when we were doing the project updates is, what does the township, what does the Board of Commissioners, where do they want to set that funding target level at? And then once you have that, then you could start answering some of the other questions that are needed to be answered in order to achieve that goal, like how much are you willing to spend per year? Then that answers what level of assumption you're willing to make here, and so on. So that's why those conversations are all important and why we need direction on it. That actually concludes that section of the meeting, the report, the second quarter report. Again, these slides are up on the Township website. There's a dedicated page to the quarterly updates, so it's under the Finance Department. So if anyone has a desire to go look at this in more detail, that's where you can find it. And then let me know if there are any questions.
Well, thank you very much. So I guess the overall assessment is that the township is doing well according to plan, so on. Would that be an accurate takeaway here?
Yeah, at the halfway point, the news is more good than it is bad, which is good. My conservative approach always requires me to qualify that we still have 6 months to go. And there's still a lot of things that happen, that will happen that are outside of our control. So, but the one thing that I can assure this group and the folks watching at home is that any kind of variance that does pop up, we'll disclose and we'll talk about and make sure that everyone understands at the end of the day.
Yes, very transparent. Thank you. Okay, that being the end of the finance quarterly update, new business, I'm not aware of any. Old business, the only item that comes to mind there was a topic that we brought up last month, and that was related to certain merchants being concerned about parking availability and the notion of a 15-minute freebie and so on. And so I think the appropriate thing for CARFAC to do is to realize that aside from notifying the board of that concern, which I have done, it's really not in our purview to pursue that this year. It's not in our work plan. The idea did come up that it might be useful for you or the staff to check with the Wayne Business Association to see if there are a multitude of merchants who have that concern and complaint, or if it's isolated. We don't have any Carl wasn't able to provide any context there, but it might be useful for the board to understand that, so they can contextualize it. And I also heard, and please confirm this, that the kiosk system that we have now does not lend itself to automatically granting 15 minutes. The thought was Lower Merion somehow does this, and why can't we? But
yeah,
it's a technical thing?
Yeah, well, first of all, Lower Merion still has meters. And those meters have a button that you press and you get the first 10 minutes free. So you could park your car, go to that spot's meter, hit the button, and you get 10 minutes. Whereas the software that runs the kiosks does not allow for someone to park, go to the kiosk, identify their spot, and automatically get 10 minutes free. The workaround that we negotiated with the software company was on every transaction then, that the payer has the ability then to hit a button at the end of the transaction to add 10 minutes. And actually, as I said that, I actually might be wrong there. The 10 minutes might be automatic. I'm not sure. Yeah, I'm not sure how the 10 minutes gets added. It may be automatic, and I apologize for not having that memorized. But it's a 10-minute benefit, but it's working differently than Lower Merion, and that's why.
Okay, so I think we've done our job. We've passed it on to the board, and certainly welcome the opportunity to listen to taxpayers in the community. But we need to stick to our game plan. We have plenty to do.
Sure.
So
the one thing I would add, just you had mentioned communication with the larger WBA group, and I can assure you that our parking enforcement folks and the deputy superintendent in charge of that division within the police department, they're in constant communication with the leadership of the WBA. And this topic is one that comes up all the time. I'm not sure there is a consensus amongst the WBA members that the 15-minute free is entirely necessary. So there's mixed feelings on that as well. But in terms of communication, there is constant communication between our parking authority folks and the leadership of the WBA. How that information or how the information from those discussions gets disseminated amongst the rest of the WBA membership, I'm a little less familiar with, but with the WBA leadership, it's ongoing.
It also seems to me that there's many different aspects to something like that. I mean, at first glance, the notion might seem appealing, but there are other aspects of it that were taken into account when the system was designed and so on and so forth, and so.
Yeah, including the neighbor of that business that doesn't get the 15-minute free, that may object. So even competition amongst the retailers themselves. So parking's a funny matter. It's very difficult to govern because there's very rarely do you have absolute or large consensus. It's usually pretty divided.
Thank you for that. All right. We have one member of the public here. We've concluded our agenda. Is there anything you would like to say, sir?
I really am grateful that you are all.
I apologize. If you do have
Yes.
remarks, please step to the mic and provide your name and.
My name is Street Toma. I live on Roberts Road. I've been here for 4 years. Politics is new to me. I really am grateful for you making these meetings public so that I can see what you guys talk about, and how you do it and manage it. So, thank you.
You're welcome. I would simply clarify that CARFAC is not political. The board is the political entity. We are the analytical support, if you want to summarize it, for the board. So we do our best to avoid being involved in the politics of things. I mean, to serve the community, I guess, always involves some aspect of politics, but our charter has nothing to do with politics. It's strictly analysis and providing strategies and options and insights to the board members that would be difficult, if not impossible, for them to find the time to generate on their own. So, but thank you for your comment and for sitting through this presentation. That being the end of the agenda, unless there's anything else, I would entertain a motion to adjourn.
Motion to adjourn.
All right, thank you. We are adjourned. No, it's my favorite part. All right.